All right. What is up, 360 in the house? Welcome. Thank you for joining me for yet another live weekly YouTube update. Let's see. So how am I sounding? Is the sound there? Everything good? I don't want to start this if y'all can't hear me. So let's make sure everything's working the way that it should be. Can everybody hear me? Everybody hear me? Everybody see the screen? Let me know in the chats there. Let me know in the chats that you can hear it. I'm going to start rocking and rolling. Okay, good. We got it. Excellent. All right, give me 2 seconds here. Oh, let's see. All right, let's go ahead and get started. Welcome to our weekly live market update review for crypto. This is our second one. Let's see, need to crank it up a little bit. Sound is okay. Okay, good. All right. So what I want to do, last week when we did this review, I spent quite a bit of time, probably a little more than I wanted to, talking about macro type stuff. All right, let me turn the volume up a little bit. Sounds like some of y'all. Is that a little better? Is that a little better? A little better on the volume? Make sure that's good. I've got it cranked up. All right. So anyway, what I want to do this time is focus mostly on crypto, where we're at in the cycle. And I'm not going to spend a lot of time on Bitcoin because we spent literally the entire last weeks just on Bitcoin alone. But we do need to kind of hit it real quick just to talk about current price action and what's happening. So here we go. On a macro perspective, crypto-wise, where are we? Okay. We are exactly where we're supposed to be, in line with all of the other crypto cycles. Yes, that is exactly where we are in the crypto cycle. And what does that mean? That means we're in the early or beginning stages of the real bull market. I say real bull market because, as everybody already knows, earlier this year, we had some nice runs on quite a bit of things. They weren't real runs. They weren't the real bull market. Again, this is something we've seen before, last cycle and before the one before that. So we've had kind of like the false bull runs replicated in both of the previous cycles. This is not new, all right? Yes, is Bitcoin hitting a new all-time high, before the halving new and making the type of run that did? Is that new? Yes. But you recall 2017, after that bull market, when we went into the bear market, Bitcoin went from 3K all the way up to 14K, and everybody thought we were in the real bull market. Not only were we not in the real bull market, Bitcoin actually returned back to its bear market lows. All right, and when I say Bitcoin, I'm applying that to not just Bitcoin, Ethereum, alts. They all kind of had that mini run, which was not in the real portion of the bull market. So there it is. There you have it. That's why we had what we had, and that's why now I can confidently say, based on everything I've seen, that we are entering the real bull market for this particular happening that we went through this year. And this should run well into next year, pretty easily. So in a broad macro perspective, what is the chart saying? They're saying everything that I just told you with words, that is exactly what the charts are saying, okay? So have we ever seen Bitcoin in this size or this massive of a consolidation? No, we have not. Why are we seeing Bitcoin in this size, massive consolidation versus it plunging to its bear market lows like it has before? Well, for many reasons. Number one, all Bitcoin has done inside this insane 200-day plus, 200-day plus range is allow the cycle to catch up with timeline. And we talked about this last week. You can't, because of the extent of time that has gone through and what is regulating the price action up here, you can't even call this a top anymore. All right. We talked about it, your opportunity to call this a top was back here, even though even the dynamics of distribution did not exist here. That was your shot at calling this a top. What this is simply a descending channel. Or a elongated consolidation correction. Let me get rid of that. All right, so So Bitcoin has simply allowed the normal crypto timeline to catch up. And what you'll notice is, while Bitcoin didn't return to its bear market lows, altcoins kind of did. Altcoins took the brunt of it. And why would that happen? Why would Bitcoin be able to maintain this incredible strength while altcoins basically, for the most part, returned to bear market levels? Now, in different regards, some made new lows. Some just entered their bear market structure, and some just went to the resistance or that top layer of the bear market structure and held that as support. So it's kind of spread out along the alts, but they really did kind of reset. You know what I mean? Like they reset. Bitcoin did not reset. Okay, Bitcoin never went back down to 15K. But what is because of where we are in the cycle, I do believe Bitcoin has seen its lows, as I do believe legacy markets, and we talked about that global liquidity event, so I'm not going to hammer that again. I do believe that Bitcoin has seen its lows. And I do believe that right now, across all charts, not just Bitcoin, but all the macro charts to include market cap, that's total market cap and altcoin market cap. And then if you look at all the altcoin charts, what we're seeing right now is bottoms being formed, all right, new bases, new bottoms being formed, and those are taking place in the form of things like double bottoms, triple bottoms, inverted head and shoulders, V double, which is pretty similar to a double bottom, V-shaped type formations, W-shaped type formations, all of those things depending on what type of chartist you are and what type of lingo you use. But not only are we seeing these bases, and we talked about how Bitcoin kind of has that same setup even here in the second half, because you kind of have, if you're only counting your candle body and not your wicks, you kind of have a triple low or a triple bottom, okay? And this is what I call a new base. We talked about this being the pullback. This being the pullback, this area. And this was the end of the pullback. And then this enters a new era in which Bitcoin is forming a bottom and there's reaccumulation. How do we know there's reaccumulation? One, because you can see it in volume. Two, because on-chain data says so. That's right. On-chain data. What is on-chain data? On-chain data is that which monitors wallets across the space. That's the cool thing about crypto. Nothing can be done in secret. While they may not have your name attached to a wallet, we can see the wallets. We can see how much is being bought, how much is being sold, what is being transferred, what is being moved. Everybody can see that. And so based off that data, based off the chart, we know that we can formulate that we have a low being set, a new bottom being set, and that throughout this we have a new accumulation period. This does not take place overnight. As much as everybody would like for this from here to just go to Valhalla, that's not how it works. Accumulation takes place over an extended period of time because whales have to do it slowly. You have to do it slowly so they're not showing you their hand. Even though if you can, put two and two together, which is what I do, you can see it and you can tell that's what's going on. Got it? Good. Okay. So we're seeing these lows, these type of bottoms across the formation of alts. But that's not all we're seeing. We're now seeing many alts, especially leaders, break their lows. And I'm not going to show you those charts right now, but I'm just giving you the information. We're seeing them not only formulate lows, but we're seeing them break those lows, break resistance areas, and establish new levels of support higher. Yes, and we're going to see this start to proliferate the broad field of alts as we proceed through the next several weeks into December. Like that's what they're all going to do, because that's what should be happening at this time in the cycle. So all is well, all is as it should be. Things are moving well. They're just not moving at the pace you want it to. Why? Because you like to FOMO. Don't we all? Everybody likes to FOMO. Everybody likes to ride the green rocket. Everybody likes to be on the green candle, but you just have to be a little bit more patient. Just be excited in knowing that our time has come. Yeah, that's simple. So what I want to do now is real quick with Bitcoin. And I really want to spend time with Ethereum, because as goes Ethereum, so will our altcoins. So we're going to spend some time on that in a minute. But I'm talking about this level that I have drawn up here, this kind of a new ascending kind of a wedge here that's formulating right now. And this only has a 2-touch bottom. So we have a touch here and we have a touch here. Second touch being also a convergence of support area because it's also the descending channel. And what we really liked was this break of the median, and that gave us yet another touch up here. And this break, this median break, grabbed the liquidity that was sitting here. We talked about that last week. There was liquidity here. This grabbed that, gave us another touch, and then ran down. Now, what I really like is that after we broke the median, we now are holding it, or we held it. I'm going to zoom in a bit. So we smash the median, we grab the liquidity, and we find resistance, and we come back down and look, man, they tried to leave us hanging on Friday. So we got this over the weekend, all right? We got this right here Friday into Friday. This move back up into old support, now resistance, and then we broke. So the cool thing about this is there's inside liquidity here. Inside liquidity happens when you have impulsive moves. So I'm going to zoom into the 4-hour. And I'm going to show you how we get that. I'm going to zoom in here. Let me make my arrow smaller. Yeah, so and when you see FVG, that means fair value gap. What that means is when you have impulsive moves, large candle moves, price moves very fast. All right, because of the orders that were placed before it in those order blocks, price pushes very quickly. And what happens is it leaves a lot of orders behind. All right. And how do we know it's left behind? Because no candle comes back up and fills this. It just keeps going. And then it does it again. All right, so we have one here. We have one here. So come into Friday, we come up here and we test this as resistance. However, last night, we got this liquidity fill. So Bitcoin came up, perfectly filled this fair value gap. Guess what that means? That means that is gone. There is no liquidity there anymore. Now, what do we have left above for Bitcoin? We have another $1,000 range of inside liquidity right here. So you can see how price action is working on support and resistance. Bang. Break median, create a new area, grab external liquidity, come down on impulse, creating inside liquidity areas that must be filled. Retest the median as support, breaks through, has a problem right here because it was support, short-term resistance, breaks it, and then fills the first liquidity. Yeah, so when there's no orders, and there's not many orders, what do market makers go? They go seek liquidity. And right now, what liquidity are they seeking? Inside liquidity. So this one right here starts at about 64.6, 64.7, and runs to about 65.7. So that's $1,000 range there, okay? Now, the cool thing is, below, there is no inside liquidity. Yeah, that's right, all the way from here. Look, here's your impulsive move right here. Let me zoom out. I want you to be able to see this. This is what I like about this move up for Bitcoin. Bitcoin moves up. Here's an impulse, but look, it fills that on this candle. So up, fill. Resume up, hit resistance. Here's one right here. Fills it. So there's no inside liquidity here. Back up, fills all of this green candle. Up, there's none here. There's none in this candle because of this wick. So remember, to have inside liquidity, that candle must be naked to the left and to the right of it. But there's a wick here. That means that all this liquidity that this is getting ready to take the space of is taken. All right? So this comes back down, retests support, creates fair value gaps, which we're filling now. That's how simple it is. So the only thing below is external liquidity. And that's people's stop losses and so on and so forth. But there's no inside liquidity lower. All right? So what has to happen then for this price to come down? Same as last time. Either spot sellers have to come in force, and push price down, because market makers are not going to take this lower to find inside liquidity, because it doesn't exist. Or if spot sellers don't show up, but a ton of people continue to stack leverage longs, then market makers could liquidate longs by reversing price and going after the external spots, the external liquidity. All right? So the only reason why Bitcoin would go lower is if spot sellers came in mass, and they just haven't been doing that. As a matter of fact, over time, all we've seen is seller exhaustion after seller exhaustion after seller exhaustion. Okay, does that make sense? So worst case scenario, Bitcoin fills these liquidity and decides to come down and grab this external liquidity, and you get something that would look like something like that, or something like this if it wants to grab these two. So these starred areas, there's a lot of people have their orders there, their stop losses, their limit entry, their entry orders, limit, stops, entries. There's a lot of market orders there. That's why it's called external liquidity. Okay, so there has to be an incentive for price to go there. It's just not going to go there on its own. And we talked about what that looks like. So that's worst case. Let's talk about what the bulls have. And I want to go ahead and back out again to the daily to show you this. Yeah. All right, here we go. So yes, we know about this fair value gap. Let me open this up a little bit. So right here, just like we had here, we used to have one. I'll show it to you. We used to have one right here. Remember this? We talked about that, and I told you, I'm the one that told y'all Bitcoin would probably grab this and pull back. And I said it would probably pull back to the median. Let's see what happened. So once this was created, as we were climbing up, I said Bitcoin's probably going to grab this and then pull back. Bang! Grabbed it, gone, and pulled back right to the median, which is where I said this would probably be it. Because remember, this is also converging with the major horizontal, which I showed you last time. So now what do we have? Now we have another spot here. There's about $3,500 between this high and this stack of liquidity beginning. This is about 70K right here, folks. Okay? This is about 70K. So there's a $3,500 area right here of external liquidity. So we have inside liquidity, and then we have external. So again, Bitcoin could come up, fill this, and grab this without having to touch these yet. I want to be very clear. So don't assume that because Bitcoin's grabbing this and grabbing this that it's done, it's over, we're going to go ahead and go. Could it? Yes, absolutely it can. And that would leave, and I'm going to be honest with you, that would literally leave so many people behind. Why? Because when I look across crypto Twitter, almost everybody and their mother is calling for something much lower. Or at least another touchdown down here. I mean, they are. Could it happen? It's going to require spot selling. Even liquidation event, up here isn't really going to do that. It's going to require, to push price back down, it's going to require spot selling up here and combine that with liquidations and all that stuff. But it's going to require a massive amount of spot selling for that. And I just don't think they exist anymore. Enough to do that. I think, we have this rising low. I think that would hold up. Now, the bullish scenario is when we start to tap this, because these are dominoes. I want you to imagine these like dominoes. I imagine these falling one after the other, after the other, after the other, creating the explosion that is needed for the real breakout move. And like I said before, potentially sending Bitcoin into the 80s, the 85 to 88K area. Yep. So again, don't assume because this gets grabbed that it's off to Valhalla. I would think this pulls back again, and I would think we look for another higher low. But I think price stabilizes. We need price to stabilize up here. Why? Because you want to attack the highs from a higher spot. Do you get this? If you're attacking the highs from a low spot, that never works. Remember, the farthest the run is away from resistance, the odds are the resistance is going to hold up or that you're going to have a false breakout. Do you understand that? You want to tap that door. Tap. Tap. And then bang, and you want massive volume to come in on the breakout. And where's the volume going to come from? I wonder where the volume is going to come from. Billions in liquidity. Yep, and so you have the potential for TNT dynamite. All right, let's talk Ethereum because this is where the money is at. This is the play. This is the one we're doing. This is the one we're longing. This is the grand slam of grand slams. This is going to be the major mover. And I want to zoom out a little bit because I do want you to see the trend channel. So when I zoom in and you see these lines, you're not going, those look random. Okay, these are not random. Not only are they not random, they were the controlling entity for price action here and into this area here as support. As you can see it, play it like a guitar string up here. And now we're forming a bottom. So I'm zooming in on this now because I want to talk about this. And you can see our target for Ethereum. This is just for Ethereum leverage longs. All right, not for altcoins and all this other stuff. Just kind of showing you what's happening and how we're making our case for leverage longs. You'll notice immediately, so I'm going to zoom out of that and zoom in on this. You'll notice immediately FVG, FVG, FVG. Guess what that is? I'm going to give you a second. Anybody? Guess what those FVGs are? Anybody? Type it in, type it in, type it in. I'm going to give you a second. What are they? What are they? I think there's actually a lag between me and you guys. So I'm just going to continue. You're probably going to get it right, but I'm just going to continue. Again, lots of inside liquidity. That's what that is. You can see these impulsive moves, and these show up on the 4 hour. This is the daily, but it's on the 4 hour where I actually get to see these and put these up the most. So we have the formation of a bottom. A bottom. Just like up here, you had the formation of a top. Down here, we have the formation of a bottom. And we have probably one of the sickest entries the 360 Elite does. And we're going to continue to stack Ethereum longs all throughout this range on pullbacks. That's what we're going to continue to do. So if you want to know how to do that, you need to join the 360 Elite because we are not writing this to small profits. We are literally writing this to the old all-time high of 4,800 to 5K. So we're talking about a massive win here. So we've already started our buys because you buy support, you get your entries off the low, and we did that off the third low. And now we have our first major inside liquidity here and tons more here, but this is the level. This red line is the nail in the coffin for bears. Ethereum back above this level of 2850. Why? Because it is the separation of where Ethereum peaked earlier in the year, this entire topping formation, and the bottoming formation, and opens the door back into the channel. Back into the major trend channel. And again, this is just the last cycle's all-time high. This isn't even going to be a new high for Ethereum. So again, this is just still not the FOMO portion of the cycle that we're talking about. We are early stages, early days of the cycle. And everyone has been poo-pooing Ethereum. Everyone has been poo-pooing Ethereum. And I really don't understand why. Because it's going to blow minds. It's going to do what it does every other time. And it's going to lead alts. And then alts, when Ethereum takes control of the ball and begins to push up here, alts are going to blow out of their bottoms and start making new higher highs and higher lows. Do you understand that? Instead of lower lows and lower highs, everything is getting ready to step into an era. Say this with me. It's going to make you feel good. Higher highs and higher lows. That's where we're headed. That's where we're going. And a few leader alts are already doing that. All right? But this is what we're looking for. What does this line up for? My elite know. My elite knows what this play lines up with. It lines up with the incredible Ethereum to Bitcoin pairing, which demonstrates the room. Look at Ethereum to Bitcoin. This is Ethereum to Bitcoin. What that means is who has power at the time to lead markets. And as you can see, Ethereum, I'm going to zoom out a little bit. Even with all of the things Ethereum has done, it has been Bitcoin's ball game. This is because Ethereum to Bitcoin, Ethereum in comparison to Bitcoin has been on a descent. And all of a sudden, we have the formation. We're at the lows. So we're at the major channel low. We have a double bottom. We have already looked at Ethereum, which we can see it forming a bottom. And when does Bitcoin hand over the ball to Ethereum? If you said at or near its old all-time high, you are correct. If you said Bitcoin hands over the dominance ball to Ethereum at or near its old all-time high, you are correct. And where's Bitcoin? Near its highs. Near its highs. Now, again, I want to make this clear. When Bitcoin loses dominance, it does not mean the price of Bitcoin is done going higher. Bitcoin always loses dominance at its previous cycle's all-time high, which is right up in this area. So anytime in here, Bitcoin can hand over the ball, even as Bitcoin is making new highs. Why? Because more money will be flowing in. Because let me show you why. Because all of Bitcoin's accumulation to get it to pump and move will have already been done. Do you understand that? Everything that's pushing Bitcoin's dominance is being done now. It's why Bitcoin's dominance continues to push to new highs for this cycle. Because it's being done right now. But once that action pushes it into a new all-time high, where is the money going? It's going into Ethereum and altcoins. And for the rest of the cycle, as far as a trend goes, Ethereum and alts will own the dominance. So do you see why Ethereum, as far as a leverage long, a margin trade that could make so much money? We're not talking about stupid little, these are Grand Slam leverage trades. Grand Slam leverage trades. And if this is in fact the bottom for Ethereum, and it's gearing up for a run to 5K, we've already bought this. And we're going to continue to stack leverage longs. Not on green candles, but as it makes headway and pulls back. We'll find new areas to add and stack and stack. So by the time this is up here and getting ready to run, we will have a large position in longs to ride it to the previous all-time high. Yes. All right. So hopefully this helps you guys out. I am going to stop this video here. I tend to be so long-winded. My original goal was to keep these videos to like 20 minutes. And oh my goodness, last time we went to 40-something minutes. This time we're at 28 minutes. So I think I did pretty good. All right, guys. Hope you enjoyed this. I hope you loved it. Don't forget to subscribe to our YouTube channel. And I forgot to mention this at the beginning, but all of our videos are sponsored by 4cmediaco.com. Literally, hands down, the best and latest and greatest for crypto news and global financial events. So follow us on Twitter. Subscribe to our YouTube. We're putting out 2 to 3 videos per week. And thank you guys so much for joining me. Love you. Until next time, baby. Here comes the boom.